Dr. Charles Nenner, welcome back to the Wall Street Reporter interview.
Nice to be back.
So Charles, if I may call you, last time we had you on was a couple of weeks ago in February. The world seemed much calmer. The coronavirus seemed like some, exotic thing in a faraway place. And now it has come to the U.S. The Dow is down 3,000 points today. We got essentially the economies of the developed world are at a standstill. There's lines to get into supermarkets in New York City. The shelves are empty. And what do you make of the situation? Where are we now, and based on your cycles research?
Well, cycles continue down for a longer period. If you connect it to the virus, you will never understand financial markets. 1 or 2 months before this virus started, we went into zero stocks. We had an upside price of the S&P of 33.89. It was exactly the high. The cycle topped, and now the cycle is down. Now, before that, we showed the CRB is collapsing. There's deflation. Crude, we said, goes to 36. Now we show it goes almost to $5.
Wow.
So that's amazing. I had to write it down because people thought it was a typo, so I had to write down $4.90. Natural gas is already down, copper is down. We're going to have a deflationary crisis, and I all the time says it's recession/depression. And we have the same thing as in 1929, 1930. That people say, well, it's the stock market. Once the virus problem is fixed, we go up again. That's not the case. The virus was just a small trigger, but the whole thing was about to collapse. Now I have to sneeze. I haven't been in China, but just let me sneeze. It's not through this media. It will not be will be contagious.
God bless you.
Thank you. You're a religious man. That's good.
Absolutely. So Charles, now actually, you're an MD. You're like a real doctor. You're not a PhD. You're actually a medical doctor.
Yeah.
So
right.
What's your perspective on this coronavirus thing? I mean, people have been saying that it's just a flu. It's not that serious.
Well, of course I build cycles based on other big outbreaks, and the cycles came up with this should be over the top, should be a bit better starting in May. And then after the summer, it becomes much worse and much deadlier than it is now.
Really? Okay. So
yes.
So this is based on cycles research that you have.
Right.
Right. Now, what are you looking at? You're looking at pandemics, epidemics. Like what kind of cycles
I look at all the old big, from the Spanish flu to whatever they call it, Hong Kong flu, to SARS, whatever, how it develops. And it's very interesting. It develops every so many years. There's a very clear cycle. So it was time to have a major epidemic. And that epidemic goes in 2 cycles. The first cycle, and they think, oh, it's not that bad. And then it comes back with a vengeance. And then it's very, very dangerous.
So are you saying that what we're seeing now is basically just the preview?
Right.
Coming attractions?
Right.
Okay, so you're saying that we're going to have a break in the summer, and then it comes back in the fall, bigger than ever.
Right. Well, I look at very simple things. I look, for instance, at Carnival lines, the cruise lines, which we shorted, and I see when there's a low. So there's a low, something like a middle of April, and I look at a couple of these things. So why would they bottom if there's no better situation with the virus? So that's how I come up with how the virus will probably bottom. But the big cycle is down, and after a bounce that it looks better, after the summer it comes back with a vengeance.
After the summer, Charles, you're one of our most popular guests, and I think one of the reasons is whenever there's like chaos in the markets, you're always very calm and relaxed.
Because there is no chaos. There is no. Sounds funny, but I mean it seriously. When I give a seminar, I say, listen, in Africa, there are populations that are not so much in touch with the West. They don't know that if you have a relationship with your wife, she can become pregnant. Because sometimes it happens, sometimes it doesn't happen. And if it happens, it's 9 months later, so you already forgot about it. And it's with this also with the markets. There's a lot of knowledge to know, but we don't know it. And the problem is, I tell my subscribers, try not to look at the media for one day if the Dow Jones goes up and down 2,000 points. It's impossible. So they totally lose it. You have to take a distance, do the mathematics, see how I explain it. It's very simple. Everything goes the way it goes, as you maybe know. I have intraday updates. I tell you exactly how many hours it goes up every day, what time it turns around. It's all mathematical. And then, of course, there is a statement that says that's why the market went up or down, but we set it out in advance. We show you the cycle. We show you during the day exactly what's going to happen. So there's no chaos.
Yeah, I mean, you're very. I mean, your attitude is very neutral. You don't get too emotional about the markets. I mean, you look at it as purely as a mathematical kind of reality.
Well, the thing is, I'm not a broker, and I'm not having a mutual funds. I can tell the truth because the other guys only make money if you buy. So they will not tell you the truth. I will tell you honestly. I have to be very careful now. But in Goldman Sachs, when I was there, they did research, and it showed that if you're positive and less realistic, you make a much better promotion than if you're realistic.
Right, right. Now, what does the velocity of this move? I mean, this is like, this is. I think it's pretty much unprecedented. I mean, does the velocity of this down move like surprise you in any way?
No, the cycles were up on the velocity. We bought. Listen to this. We bought in February the April 15 calls. I think today the VIX is around 80.
Wow,
it's very
wow.
simple.
Yeah.
It's very simple. The problem is that when I'm going to buy the calls, because the cycle bottoms, nobody talks about it, so nobody pays attention. So even subscribers says, well, let's see if it happens. And when it happens, they're too late because then it becomes too expensive. It's very difficult for people to anticipate that we know what's going to happen because their mind is filled up the whole day and even the whole night by all kinds of explanations. So my major thing is we have the black swan theory that was made up by somebody that I forgot his name. That means is that if something will happen that I cannot explain, that he calls the black swan theory. So everybody's gonna look what the black swan is. I don't know, but I don't know. I know when the black swan is coming out of hiding. But they don't look at that. They want to know what it could be. And I don't care what it could be. I just want to know when it comes out.
We have a flock. We have a flock of black swans right now.
Well, this is a black swan that woke up, and it happened to be a virus. Could have been something. Could it be a war? Could be an accident with uranium. So
we also have there's also the oil price war. I mean, there's a couple of things happening.
What?
You have the oil price war right now. So there's a couple of things at the same time.
Yeah, but it has nothing to do with it because look when we were short when crude was 68, I said it goes to 36. So ha. I had a discussion today with CNBC in London. I was in London about half a year ago, and I said, interest rates will go much lower. Everybody left. And then I said the Dow's going to 5,000. They almost kicked me out. So today I said, maybe you want to reverse that. Maybe you want to take it seriously now. You guys have no clue. So until something happens, they don't know. So the black swan theory is something's going to happen. What is it going to be?
Right.
Because they don't know how to know when it's going to be. So the problem is when is it going to happen, not what is going to happen.
Now I want to go back. Now you said something interesting. You're saying that oil. You have cycles that show oil going to $5.
Correct.
That's a huge crash. I mean, I don't know what that says about the economic situation. I mean, $5 is like a record low.
Well, it's major deflation.
Is it deflation or depression? I mean, it's
deflation that will lead to depression. If you look really, take some distance and you look at this stock market behavior, forget about the virus, you would say this is a 1929 situation. We're in for a big depression. We just pointed that it's a virus, and if we solve the virus, everything is okay. So that's why we never learn.
So bottom line is you're saying that we're heading into a depression right now.
Right, been saying that Dow 5,000.
Dow 5,000. No, you've had the Dow 5,000 for like a while, and we actually kind
Right.
of almost got there in 2009.
I don't know when it was published. It was published because, excuse me, they asked Mr. Prechter, who developed the Elliott wave,
Yeah.
how low do you think the market can go? And he says 1,000. So I got a call from New York Times. What do you think? I calculated it and I said, can go to 5,000. And even while we were going up for all these years, I says, we're going down to 5,000. And I also mentioned there was life at 5,000. There was in the mid 90s. Life wasn't that bad. But, if you're in the market and you are a baby boomer and you don't get any interest on your thing, what are you going to do? It's a big problem, especially in Europe. Soon consumers have no buying power because they don't get their pensions. They're below water. The interest rates are below zero. They have to pay money to keep the money in the bank. People are going to be afraid to spend. So this is going to be a vicious circle. It's going to be a big problem.
I was speaking. We had an interview with Asher Edelman the other day. Do you remember Asher Edelman? The big corporate raider from the '80s in the Wall Street raider.
Who said that's very interesting because he said he started in '87, the crash with his computer programs, and then I showed him that I was already short before the U.S. market opened, and the European markets were already down 35% before this whole thing started with Edelman. But it's the same thing as 9/11.
He's saying
they think that 9/11 brought down the market. It didn't. Did you notice that? If you look at the European markets on that day and the day before, they totally collapsed. And after the attack of 9/11, they didn't come down that much anymore.
Right. Now he's saying that the Dow, he believes that we're heading also into a kind of a depressionary 1930s style depression, but he's got a target of about 14,000 on the Dow. But he's saying that unemployment is going to go to about 20%, because of the whole coronavirus is going to just crash everything.
You should ask him. I always challenge people: ask him to show you how he gets to the number.
Yeah. I guess he's picking the 14,000, which I'm looking at. Personally, I'm looking at. 14,000 seems to be like the base of from like the last. Just technically, that might be a base. The next bottom, sort of.
That's old-fashioned technical analysis. That's 40 years behind.
The new thing is the cycles.
No. The new thing is, I give you an example.
You're right.
If you will go on Charles Nenner Research Center and you go to CNBC, the middle of 2006, the Dow Jones was at 10,000. Then the lady Becky Quick, who is the famous anchor, says, "Where are we going, Professor Nenner?" I said, "We're going to 14,500, and we're going to be there December 27th." And then I'm on CNBC again, December 27. Where were we? At 14,500. So it has nothing to do with support, resistance, that old stuff. There are formulas that you can calculate if something goes down, how low it goes, and if it goes up, how high it goes.
Do you follow the what is it, the Kondratiev cycle?
Yeah.
So where are we now in that phase? Are we in the spring? Are we still where are we in that Kondratiev cycle?
Well, we're in a deflationary situation, and we're now in that every 60 years another continent takes over the lead in the economy. So Europe was already down, and China, Singapore, India, Australia is going up, and the United States is in a big hurry to destroy itself, according to Kondratiev Cycle. So it's not surprising that things turn out to be very bad. I just wrote an article that I said already 15 years ago. After the 2008 crisis in real estate, the next big crisis is in student loans. And now I hear that Biden decided that if he becomes president, if he goes bankruptcy, they forgive the student loans. Well, I have friends who are doctors with student loans of $200,000. Everybody will go in bankruptcy. And if you see what is outstanding in student loans, it's the end of the United States. I don't know what they're thinking.
So student loans, you think, is the next big crisis?
Correct.
Because I think, like right now, I understand that Trump is basically saying that they're going to either freeze no interest, or they're going to freeze no payments until whenever. I think this
No, no,
is
but I just said Biden decides, in order to have the left wing of his party support him,
he's going to completely forgive.
Because now, if you go on bankruptcy, you're still stuck with your student loan.
Yeah.
So they want to fix that, so you also get rid of your student loan. So for a couple of $100,000, everybody goes in bankruptcy.
Yeah, it's the student loan thing is tremendous. What about let's talk about like some of the markets like gold, and silver. Supposedly these are safe havens, and today gold. So I mean they've gotten like destroyed. Although at the end of the day, the miners, the gold miners, were up substantially. It looks like they might. I don't know. Does it look to you like they're bottoming out?
I have to laugh about it. I'll tell you why. I give you our last gold trade. We went long gold at 1490, and we sold at 1667. I said the cycle tops. And then I have people, well, I'm in there for the long run. I said, you're not in there for the long run because I know what's going to happen. It's going to go down $30. Long run 50, long run 100. You call at 200, you sell out. And when I'm going long, now you're too hurt and you're not going long again. So it's a major thing with this gold. It goes according to cycles. Now my next cycle low is, let me take a look, is March 26th. And then I wish people would take a look at my research. You can get it for free for 4 or 5 weeks because something might change. But I think we're going long on the 26th of March again.
Okay, so you're saying that precious metals can hit a low around March 26th.
Right, but I prefer that people will ask for the research. You can go to my website to get it for free. It comes out four times a week because if we move it up or down a couple of days, and I want to respond to what I said on your show because it's all black and white. Please look at the research.
Okay, and we're going to have a link to your site at the bottom so people can go to your site and sign up.
And anybody who comes to you gets 50% discount.
Okay, make sure. So anybody who's watching this, make sure would you put in the subscription, put in Wall Street Reporter. You get the 50% discount. Now, Charles, last couple of times we spoke, you seem to be like more bullish on gold. You're like I remember you said that you're expecting gold to hit 2,500 plus.
Correct.
So explain, how does this work? So you see a bottom around March 26th, and then an up cycle, or what are you expecting?
We started to be long, I think around 1,100 or so in 2011, with a target of 2,500. But we like to be out of the market if gold collapses $200. Because that can happen 3-4 times a year. So I'm not going to sit there and wait till it's 2,500. Because in the end, there's not so much rate of return. So I take the cycles. The cycle tops, we go out. Some people go short. Cycle bottoms, we go back in. And that's how we get to 2,500 because that can take 2 years. In the meantime, we have very nice trades.
I think it's important to mention that, a lot of times, when you do interviews like this, you're talking about long-term trends. But your newsletter actually, you might talk about a long-term trend, but you see a lot of intermediate moves in the meanwhile based on whatever the numbers are. So it's possible. So it's like a lot of times, people say, oh, well, he's been saying it's going to go to X and now it's Z. But the reality is, if they actually were subscribers, they would actually see that you were long short at various points in the cycle. So it's I think it's important for anybody who's watching this that they should subscribe to your letter and again.
Well, let's be honest. I got long at almost the low in March 2009. Now, if I would say, and I published it, it goes up until 2018-19. I have nothing to sell anymore. No, you're laughing. You're laughing because that subscriber says, I'm interested in the long term. Can you build the long term? I'll pay you extra. And then disappear because they know the long term. You understand? So,
exactly.
So we do the intermediate moves also.
But the intermediate moves are important because people don't have any patience. When you have moves like what we're seeing now in the market, people they may know where something is going long term, but they really do want to. They kind of they want to get your perspective like once a week to know what's happening.
Well, we had long-term outlooks for bonds we made like 35% a year. What do? We bought the cash bonds, the 30-year bond. When the cycle topped, we sell it deep in the money call. And when the cycle bottoms, we buy it back.
I know you're actually. I know we only have a few minutes because you have another interview
Right.
coming up. So I want to ask you. So in terms of gold, where do you see gold bottoming out by? You said March 26th.
It's now around 1495, maybe 1450.
Okay.
I don't know. Look at the research. I'm not because I want you to go to research, because I don't have everything ready, because we do crude oil, we do Japanese yen, we do Brazilian real, we do the Bitcoin. The Bitcoin, by the way,
Yeah.
is doing 100% because the Bitcoin has no fundamentals. So we're not going to be bothered by any statement coming out whatsoever. So the Bitcoin is our best performance.
It's fascinating because we've talked about the Bitcoin a couple of times, and again, because it's purely a mathematical creature. There's no
Right.
so there's no underlying. What's I haven't looked at Bitcoin. What is Bitcoin right today? I didn't even check it. Is it
I think
like
it's around 5,000.
5,000? Now you actually did say that you think it could make another go back to 20,000
Yeah.
long term.
Yeah.
Short term, what's your take on Bitcoin for the next month or so?
I think the cycle is bottoming in a week or 2 weeks, but
Okay.
again, I don't have everything ready. Since you get it for free, why don't you look at the research? Everything is there with the cycles, with the levels,
Okay.
and take advantage of it.
We're gonna have the link down below, so anybody watching this, please do check it out. It's again, it's gonna be half off if you mention Wall Street Reporter. Charles, on a final note, so to sum up, you think that the coronavirus situation is gonna calm down, sometime by the spring, and it's gonna be back with a vengeance in the fall after November.
Yeah.
Okay.
And by the way, I wrote a whole piece about, think about the economics. This is no joke what's going on. Don't think like people say, oh, I have no stocks. This is going to influence people and change their whole lives. And I don't want to scare them, but you really have to think what your future is going to be. For instance, I wanted to sell real estate over here. Also, the house I'm living in Amsterdam, because I'm not much here. I'm not selling it because I don't know what's going to be with the banks. So you have to check out which bank is the safest bank for you. You have to do some homework.
So you're saying it's that serious? Basically, you're saying you're expecting banks to fail.
Yes, because I had this famous call that if Deutsche Bank will go below 6.5, it goes into bankruptcy. I made that call 3 years ago, and it is now at 5.5. And they're so interconnected, the